Welcome to today's Daily Report Markets Analysis videos with me, Richard Perry, Market Analyst at Hantec on Wednesday, the 5th of February. Interesting moves going on in markets. We had a strong rally yesterday across the board, a risk rally that really did take the safe haven plays out of the picture, where we saw the yen strongly weaker. We saw the gold price sharply lower. We saw equities rebounding quite considerably. Look at this S&P 500 rally that we have had in the last couple of days. Now, interesting moves this morning. Again, we had initially, we were looking actually at downside, a little bit of caution coming in, but reports going around social media that apparently there's some treatment that has potentially been developed in China for the coronavirus, and that could well be a reason certainly for markets to pull higher, and that's what we've seen. S&P 500 futures were, well, about 0.2% down when I first looked at the morning report today. They're now 0.7% higher, and that has significantly turned around the outlook on these European markets this morning as well. They were looking lower initially, but now they've swung into some decent gains once more. Look at this oil price rally we've seen every time in the last week or so. Intraday rallies have been sold into on oil. Now, this is an opportunity where WTI is over 2% higher on the session, 2.75% higher. Can it hold on to these gains? It would be a real sort of sign of a possible turnaround if it can. 51 figure is a bit of resistance there, so it'll be interesting to see how this one plays out. But certainly at the moment we are seeing this risk rally. Look at the Aussie dollar outperforming. Aussie dollar is tightly knit to the outlook for the Chinese economy, so subsequently it is one of the big movers on improvements around the coronavirus situation, and subsequently we're seeing that the yen being the weaker currency, sterling regaining a bit of upside as well. So it's interesting that we are seeing these markets turning around on this news. Now, what we have got today is the set of services PMIs. We've seen Cajun services for China overnight, 51.8, which is down from 52.5. Let me show you that chart. I can find it. Falling away. So a bit of a divergence on the official numbers to the Cajun numbers, but still in expansion territory, which is the main positive, I suppose, you take from that. Into the European data, we've seen again another slight upward revision to the flash numbers of the services PMI, and also helping the composite PMI to 51.3. Look at the UK data just come out in the last couple of minutes, 53.9 as a upward revision on the services PMI for January. So really is a big turnaround that we've seen since the December number, which was bang on flat at 50. So 53.9, that's helped the composite final PMI up to 53.3. So pretty decent recovery we're looking at in January, if those numbers are to be expected. Decent recovery for the growth numbers for the January GDP can be expected there. So into the afternoon, we're looking at the Adp Employment change. Will this give an indication for payrolls? 156,000, very much middle of the road in terms of where we are late cycle, down from 202. And then we're looking at the international trade balance, deteriorating, 48.2, 5 billion deteriorating actually from 43.1 back in November. And then at 3 o'clock, the ISM non-manufacturing PMI, 55.0, so in line to where we were last month. But very interesting how these PMIs continue to surprise to the upside, and that's going to just add to this improvement in risk appetite that we have seen. So takes me on to my chart of the day, which is the dollar Canadian. Now let's zoom out and I'll show you time and again throughout the latter parts of 2019, 133 figure to 133.50 was an area of resistance in a big, long consolidation rectangle. We've seen a sharp run higher on dollar Canadian as the oil price has fallen sharply in the past 2-3 weeks. and subsequently we've seen the Canadian dollar weakening. However, is this the point at which we start to see that turning around again? We've seen obviously the move to 70 on RSI. It actually hit 70 yesterday, come back from there. MACD lines looking strong still. Stochastics, are they losing a bit of impetus? But my main point is that 133 to figure to 133.50, big resistance band, big top of the range there. And it's interesting that we've seen the market hitting that level in the last couple of days, 3 days actually, if you include today's session, and turning over. Yesterday's candle, negative. Today's candle, negative at the moment. But look at the hourly chart. We've started to see an uptrend being breached. We're seeing these momentum indicators. Well, RSI around 40 on the hourly. If it went below into the 30s, that would be a bit of a concern. You've seen MACD lines bear crossing just a shade above neutral, MACD line and stochastics as well bear crossing. So I think if you saw a breach of the support at, well, 32.50 is where that uptrend comes in today on the daily chart, which has already been hit as support, but you could argue that's a small top pattern. If it breaks, that would imply 50 pips of downside move towards 32 figure, but then you've got the support of the old higher lows coming in, so you'd be looking at 32.10, 32.15 being your sort of first basis of support really, and it'll be interesting to see how the bulls can whether they can continue higher given the key overhead resistance, and also given the fact that we are starting to see the oil price rallying again. So yeah, interesting potential turning point on dollar Canadian. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.